Hey, everybody, welcome to Raising Millionaires. I am your co host, Roger Bryan, and that's
Richard Lorenzen.
Richard. You're all dressed up fancy today. What did you have going on this morning?
Yeah, we had a bunch of TV going on for our clients. We were down at the New York Stock Exchange. We had a couple of our clients doing TV interviews. We do that like I'm there like twice a week, where I spend just like several hours knocking out a bunch of client TV stuff with a bunch of different networks, and so that's what we do.
Well, before we jump into the macro market stuff, what was the energy level like on the floor today?
Yeah, honestly, it's kind of quiet. It's August, so that's part of it. Like the activity on the floor, kind of it's kind of quiet this time of year. But you can also feel an undertone of kind of caution because of markets being so high. The inflation number came in better than expected this morning. I was on.
I mean,
Yeah, but
2.7 versus 2.8. Come on.
yeah, but any excuse to continue to go up,
I'm glad
is
you used the word excuse and not reason.
so the markets are up over 1% right now. The
I know, I
S&P's
was
up
looking at
just
that
about
earlier.
1%. Um, I don't know, like, there's a lot of mixed feelings in the market right now because you have data still coming in pretty strong, but then you've got some weird stuff going on in DC, and then you've got the whole backdrop of the fact that just equities are so high. Um, like I look at the VIX right now. Actually, what's interesting to me is right now the VIX is down 9% today, with the broader market, basically being up about 1%. Yesterday, the market was up when it was up, at least in the morning, it was up about half a percentage point, and the VIX was up like 3.5%. And I was like, that's strange. The market's pretty much, kind of even. If anything, we're a little bit, to the upside, but the VIX is up 3.5%. And then we ended up fading into the close, and the market ended up closing down yesterday. Today we're back up, and now you see this 9% drop in the VIX. So obviously trading volume's a little bit lower than usual, being that it's the middle of August, and so that's probably contributing somewhat to this. But at the same time, it seems like there's a lot of mixed emotions in the market right now. And it would be, in my opinion, it's a pretty dangerous time to try to time equities.
No, it is. What's interesting is there's always the conversation going on about interest rates and the call for the Fed to cut. And as the jobs numbers continue to start to look a little bit more bleak, and the revisions also are making it look worse, the conversation of whether or not there should be a cut and then what would happen if there is a cut. One of the things that they were talking about today was that even if they did cut like a half to a full basis point, it could actually have an inverse effect on real interest rates for consumers because of the risk associated or the decoupling of the rates, meaning if they were to lower rates by a full basis point, would mortgage rates actually come down? And a lot of pundits think it would actually go up. And it's like, what, that kind of defeats the purpose of these types of rate inferences.
Well, when we saw two Fed rate cuts, was it end of last year or maybe it was early this year? I can't even keep track anymore. But we saw two back-to-back rate cuts, and the impact on mortgage rates muted at best. Mortgage rates did not come down, and actually now they're probably higher right now than they were at that point. Um, there hasn't you haven't seen a lot of in the last 2 years. I would say you haven't seen a lot of translation between Fed rate policy and mortgage rates, which is interesting.
So I know
What's the 30
Trump
year at
wants
right
rates to come down to lower the borrowing costs on the United States, but what will it have any positive impact for consumers?
now? It's really hard to say. Like I'm trying to figure out where the 30-year mortgage rate is right now today.
Is it 6.8?
Is it 6.8? So like it's more or less in a range. I mean, according to bank rate, the weekly national average is Well, that's not right. Let me make sure I'm looking at the right thing here. And according to bank rate, weekly national average is about 6.7%. That's down from like 7 a couple weeks ago. So that is a meaningful decrease, but
It's not going
it's
to get people to rush out and buy
it's
houses or
exactly it's not
refinance.
going to break the dams in terms of like tons of new buyers. I don't know. The housing market's interesting. There still is a supply shortage, especially in certain parts of the country. Like if you look where I am in the New York area, there's still a lot of buyers in the market. There's still a supply shortage. Um, but then you look at other parts of the country, Florida, for example, Texas, you're seeing prices go down. So
It's super interesting. Like, so I grew up in Cleveland, Ohio, and on Facebook, I'm still friends with some people that I went to high school with, and some of them are real estate agents. And I saw a person list a house in a city called Brook Park. That's the city that I grew up in. So, for example, these are 1,000 square foot homes that were built post World War II for people that worked at the Ford and Chevy plants in the local area. So,
okay.
like, they're cookie cutter,
Yep.
small homes. My mom, when she was still alive, I think 2019, they sold their home in Brook Park, one of those homes, for like 127,000.
Okay.
Right. And I thought that number was astronomical for those types of houses. A house right down the street just sold last week for 219,000.
Wow.
So that's like what, a 50-60% increase in like 5 years.
Wow.
Now you could throw a rock and hit the Browns, the Cleveland Browns new development that's going in on the old Ford factory site. So I don't know if the whole neighborhood is getting a push from that. I don't see exactly why they would. There's still 980 square foot houses, 3 bedroom, 1 bath. But man, I could not imagine buying one of those homes, even as a rental property, for $219,000 right now. But it's just, that's the number, right?
Well, you know, 1,000 square feet in New York City would be about $3 million.
Oh, I mean, even when I was in Washington, D.C., my 1,000 square foot condo there was and this was 15 years, 13, no, 15 years ago, it was 269. I bet you it's 500 now.
Yeah. So
That's the world that we live in. So it's crazy though, like mortgage rates are still high, demand has fallen because of that, but the supply crunch is so great. You see these prices that just still astronomically high.
well, some of the supply crunch is not going to go away because it's not an economic problem. It's also a population growth problem.
Well, just deport
Right?
everybody, then there you won't need as many houses. Isn't that
You've
the
got that.
solution?
You've got a lot of baby boomers who are staying in their homes longer. So I don't know. So interest rates are one thing right now that are weighing on the economy. Another big one has been tariffs. Where are you? What you're thinking
So,
of tariffs?
okay, Donald Trump has created the greatest tax increase on the middle class in the history of this country. All of his BS is exactly that. Tariffs have created a 13 to 14% tax on the goods that every person in this country buys. That is the largest single tax increase and in the shortest time period ever on the middle class. So everyone that's bragging about the big beautiful bill and all of the tax decreases is either got their head buried in the sand or is ignorant to the fact that everything has become significantly more expensive in the shortest time period imaginable. So Donald Trump is not helping anyone in the middle class with these tax increases. They're bragging about, oh, we had $20 billion in new tariff income last month. Yeah, you know who paid that? The American consumer. Right at a time where jobs data is plummeting, where kids are graduating from college with degrees in data science, coding, and they're getting jobs at Chipotle. That was an article actually on CNBC today because AI is taking all of the coding jobs. I I think the undertow of the economy is actually worse than, right? Everything's screaming alarm bells except for the stock market. The stock market keeps going up, right? But so much of the underlying data is screaming, we've got a problem and we're about to drive off a cliff. Am I shorting the markets? No, but I am having one of those pessimistic weeks looking at all of that data going, why are we not realizing what's actually going on?
Do you think that the price increases from tariffs have been fully filtered down into the marketplace yet?
Not fully, but enough of them have come through where anyone that's paying attention, even the post COVID increase in prices, like the surge pricing through COVID because of limited supply chain, if you look at a 5 year map, you're 50-60% up on most consumer goods, right? Every
Yeah.
time, like, we have this market that we go to, which I think should be like, I'm going to call it the Hartville Market Indicator, right? It is a middle of Ohio. It's a huge market, but right, it's a place that you go where you can get high quality goods at an inexpensive price, right? So you could go there and you could get a quart of soup. I swear earlier this year was $8.99 for a quart. That's enough for like a family of four to have lunch with maybe a salad or bread. We went through this weekend and it's $11.99. That's what, a 35% price increase this year. And I'm not saying that's a direct impact on tariffs, but that is everywhere and everything. And I just don't know why. Like, okay, CPI came in 2 points. I don't buy it. I don't buy it.
So unpack then. So CPI did come in this morning at 2.7. They were expecting 2.8. Where do you think do you think that that number is heading back up higher in the next quarter?
I think it's already higher. I think I don't want, maybe I would use the word manipulated, right? If Trump can't control the people that give the jobs data, fire them and then bring in someone new who just won't give out data anymore. If Trump can't control the person setting interest rates, you know what? Keep pushing them and making their life miserable to make sure that they exit and they can bring in somebody that will. If the data isn't what he wants it to be, why not just put out fake data? I mean, why the hell not? You have no comments on that?
Um,
I think it's all freaking smoke and mirrors right now for some reason.
and so the big question then is, number one, when do you think that the stock market starts to price that in? And number
That's
two,
the problem. It should already be pricing that in.
well, number two, what do you think the discount would be with that priced in? Is that
13 to
a 20%,
17% correction.
17,
13 to 17%.
13 to
Yeah.
17?
When
Okay.
you look at historical indicators, you look at the high P&E ratios, and although on an average of the S&P 500, it still looks healthy, the problem is the weighting of that, right? It's never been heavy, like a heavier weighting into a single stock Nvidia or have a single sector tech. It skews the data to where it makes the averages look okay, but that's skewing, right? Maybe AI has a lot of legs to run. The articles coming out, AI's created more billionaires faster than any sector ever, right? Most of them are billionaires on paper. Try taking that paper to the bank. Well, I guess you can leverage and loan against it. It'll create more millionaires in the next 5 years than anything else, but at the price of so much else.
Right.
What do you, I mean, you talk to investors all the time. You're on the floor, you're talking to them. Is there like this crazy exuberance about future market gains, or is there this like heavy-hearted caution to like this makes no sense or somewhere in between?
Well, the caution I don't think is as heavy-hearted as you might think, but there is caution for sure. It's mainly tied to the technicals. I think I texted you maybe a week ago. One of our trader clients pointed out that he had identified a blow-off top pattern on the S&P chart, which would typically signify that there's a significant pullback coming. You have more than 10%. And so based on technicals, there are people out there that are cautious, thinking that we are due for some sort of a pullback. That's technicals. On the fundamental side, I would say that it's still surprising. It's not exuberant, but it's surprisingly cautious, surprisingly optimistic, given some of the red flags that we're seeing in the data. People do seem to think that we could be on the cusp of like another rip higher in the economy. Partly
I
driven,
agree. I'm hearing the same things. I just don't know how to substantiate it
well,
other than
partly driven by tax cuts. just more liquidity in the economy.
What?
Um, right.
I'm sitting here talking about a 13 to 14% tax increase that
Well,
Trump has brought
see,
about.
because we're talking about two different things. You're talking about tariffs, which is essentially a tax increase on consumers. I'm talking about a tax decrease on, let's say, corporations and higher net worth people who are going to use that liquidity to invest in businesses. Um, and by that logic, I talk to a lot of enthusiastic, high net worth people, who are thinking about how they're going to put that money to work. Um,
Well, I think the inverse of that though too is that there's so much, and when I say meme stock momentum, I might actually mean like retail interest that's creating um, artificial price inflation, right? Who was that? American Eagle does a jeans commercial, and then all of a sudden retail investors push the stock up without any solid foundation or technical reason for that stock to pop like that. Ooh, you know what I did here today, and I've been looking at this, is Circle,
hmm.
right? 450% up
Yep.
from the IPO. There is a huge unlock of stock coming in December. And there was, they kind of blew out earnings, which was great for them. But I was looking at shorts on that or puts, sorry. There's still support up to about $80. What is that at 165? So it'd have to fall by more than half to really create huge leverage by December. Sorry, I got sidetracked thinking about that
I
one. It's
mean,
up. It was up like 17% after earnings today. Now it's just up 3.5.
it all. So you think there would be a lot of people that are really going to exit like a significant portion of their positions
Well, think about this,
after that
right? When
date?
those options were granted, they were probably in the $5 to $25 range.
Yep, no doubt.
Yeah. So yeah,
Good
I do
uptake.
think when that lockup ends, a lot of people are going to liquidate. And you only need a couple, right, to start the rush. Now, I don't know if they could do something internally to try to compensate for locking up longer. I mean, that gets complicated. I wouldn't do it, but I'm also the person that sold it, what, 37.50 or 35. So,
Hmm.
um,
It's going to be interesting to see what happens with that. Also, kind of on a separate note, but kind of not. It's kind of related. You don't see a lot of big companies like Circle in the tech space, like emerging tech companies, like future of the industry kind of companies, going public on public equity markets anymore. Um, OpenAI, for example, like a lot of them are still
Well, you got to be careful though. OpenAI is technically still a nonprofit, even
yeah.
though they're trying to reorganize, which that whole thing just is crazy. But I understand what you're saying. I just think that like OpenAI is a technically a complicated example.
Granted, yep, that's fair. I mean, what the point I'm trying to make is that
Middle markets, we've talked about this before.
when we talk about like young investors, right? Thinking about like where do I get into the market right now, or what names that they should be buying. Um, I feel like it's a lot harder today for individual investors to start to pick winners like it would have been Apple 20 years ago, because so many of these companies remain private now.
No, I don't disagree with that. When you look at like I get the emails every day from Equity Zen on the prices, the middle market prices on a lot of these, and I've just seen a lot of them go crazy. Now the thing is, I'm seeing some of them down 50% from previous offers, but I'm
Yeah.
seeing some of them up fivefold in the private markets, right?
But for the average investor can't even participate in those deals because you have to be accredited, right?
Well,
And
that's going to end
so,
soon too. So
well, okay, so yeah, that's true. My point
which,
being,
if you really think about it, if you are a middle market, if you are an accredited investor and you can buy middle market right now might be a time to start adding to. This is not financial advice, but creating a portfolio of those assets if you believe that in the next 12 to 18 months or during the Trump administration that they are going to open those markets up, which would be a floodgate. Now the thing is, though, those retail investors that are not accredited aren't all of a sudden going to have a bunch of extra capital. So that money is going to have to come out of some market to go into another market, whether that be out of crypto, whether that be out of public equities, um, or when you look at a lot of these platforms now that are both crypto and equities, the middle market coming up right behind it and being like seamless would make perfect sense once that accreditation window is.
It's also going to bring a lot of new younger investors into the fold too. Like investors, people who just never participated in the market before, who were excited because they can own a piece of. I'm using OpenAI again because it's just a
No,
prominent
I know what you
example,
mean.
but
You made a
but
better example before, though, too. Like 30 years ago, buying Apple, Apple today would not be publicly traded like it was in the early
exactly.
days of that. There's no reason to.
Exactly. Right. Those companies that the apples of today don't want to go public because they don't want the scrutiny. They don't want the regulatory oversight, all the things that come with being a publicly traded company. They don't want. And so the problem for new investors is that you know you don't have the same kind of opportunities in the stock market today that you had 30 years ago, 20 years ago, even 15 years ago. Um, I think that's going to be interesting because you're going to see, I think, over the next 10 years, more retail money shift towards private markets. And if they do away with accredited status, it's just going to accelerate that. I think the latest proposal was that they were going to add another eligibility pathway, I guess you could say, to accreditation, where if you take a test, I think it
Yeah.
was, and you pass the test, like you can be accredited even if you wouldn't meet the traditional definition of an accredited investor. And I don't know, maybe it's good, maybe it's not. It obviously creates more risk in the market for retail investors who don't know what they're investing into. But
I
at the
know,
same,
but the meme stock craze today, people are making bank off of these stocks as retail investors. They couldn't read a technical and probably don't even know how to explain what a P/E
fair point.
ratio is, and
Yeah,
they're
it's a fair
still
point.
they're in the market.
Yep. So if anything, it might level the playing field to give people more access or democratized access to some of these private assets that right now are just dominated by funds and by high net worth people.
I hear you. Let's talk AI. Let's talk some marketing stuff.
Okay.
All right. I know you do look okay on the marketing side of things. You do really well with cold email and LinkedIn outreach. So, question for you, and I've been experimenting with a lot of tools, some services, and it was interesting. So, my cold email open rate yesterday shot up to like 55%
Okay.
because a whole new set of email addresses were finally warmed up, and I was able to spread it out across multiple
Mm.
servers. And then today it collapsed, which I don't know why. Um, the response rate is non-existent, even with a high open rate. I'm testing a couple different like of the personalization tools to kind of like make them more personalized. But what do you do to increase the response rate, or do you even care about that?
Well, we care about it, but only to an extent. And if you're seeing a high open rate and a low response rate, it's either, to me, it's either one of two things. It's either number one, your message is not right, or number two, you're reaching out to the wrong audience, which is kind of the same thing when you think about it. Like,
No, it is. And the funny thing is on this specific first list, it's as hyper targeted as it can be to a sector using a specific tool, and the messaging being about the use of that tool in that sector, right? I don't know how much more in sync that could be. Just the response rate has just,
so
I've never had a worse one before.
so these emails that you're getting a 50% plus open rate on, are these just emails that have been sent out like the first email this week? Have you done a follow-up email for
Yeah,
those?
there's a second and there's a third email that go out to them,
How far
and
apart?
the open rate decreases, which is
That's
normal.
normal.
But there's just no response at any level. And some people have opened all three emails, so it's probably going to be a copy type offer thing that I need to work on. But I'm trying to use these AI tools for personalization, and
How many days apart are the emails?
it goes Monday, Wednesday, um, Monday, Wednesday, Friday, Monday, Wednesday, Thursday. So it's 1 to 2 days between each.
Yeah, that's about what we do. We do like 2 days. Um, how many emails have you sent? Like contacts, I should say, not emails.
We have started sequences on 169 and oh no, wait a second.
And you're sending 50 a day, or is it 20 a day?
250 a day.
From how many email addresses?
600, almost 700.
No, I mean,
But
from how many
the,
domain names?
I think I'm up to 17 now. And I've
Okay, so
got
you really
more
scaled
warning.
it up.
Oh yeah, yeah, yeah. I've got my next list has 5,000 contacts in it that have already been scrubbed and are ready to go. So I'm building a machine. I'm just trying to get everything dialed in right now.
So if you're doing 250 a day and it's getting to their inbox, right? Because you're using 17 different addresses to send these, so you're probably not getting flagged as spam, and you're seeing a high open rate. So it
Yeah,
is
the
getting.
open rate skyrocketed with the new set of domains that came out.
So I would think it has to be the message.
Yeah. Which again, I'm testing these different AI automation tools that like scrape the website, scrape LinkedIn, and try to personalize it.
Beyond the personalization, though, is there something you're dangling in front of them that they would want, like a specific deliverable or outcome?
You know what? And that's a great question. So when it comes to cold outreach and cold email, what is the right offer to position in front of somebody that is like low barrier to entry that gets them to raise their hand and say, sure, I'll take that without them feeling like they're going to be pushed into something else, right? I've seen your outreach. It's brilliant. Like, hey, here's what we do. Do you want it? And if
Yep.
I'm in that sector, my answer is probably, yeah. I'm trying to think of that in the home services space, right? Nobody wants another audit, another playbook, another newsletter, right? What is that?
Well, they want what? Like to me, it's either they want depending on what marketing channel you're talking about, they either want a better return on ad spend, they want a better conversion rate on their email marketing, they want a better, they want more SEO traffic. Like, is there a specific channel that you could
Oh,
speak
and
to?
then, okay, so this is interesting too. When you're crafting an offer in the marketing space today, how do you craft a compelling or irresistible offer? What we did in ours was we're really focused in on being results.io. So we're results based or performance based marketing, right? We get paid when you get paid. That's always been my bread and butter in the nonprofit space for 7 years, millions of dollars in the influencer marketing space, even in the Web3 space, it was kind of performance based because we invested first. So I'm trying to bring that into the home services, but I don't know if it's translating well or it's getting drowned out with all of these. I don't want to. What
So,
is the
so
right
the outcome you're talking about then is lead gen.
lead revenue generation? Right,
Is
measuring
it-
actual dollars in the bank.
Right. Okay. Because we get paid when you get paid.
Yeah, who wants
So
more leads? Well, everybody
if
kind of says they do, but what you actually want is dollars in the bank, converted sales.
are you helping them close the lead as well? Like, is there a sales component to this, or just
There is because most people don't, especially in home services, right? They've got no follow-up sequence, right? No automation. They've got quoting, but again, they don't follow up on the quoting. They're not tracking their inbound and outbound calls on every lead to look at last touch point, number of touch points. They're not looking at omni-channel, seeing if people are looking at them across all the different marketplaces, or not marketplaces, platforms. Um, and we've done it numerous times, and it's so easy to do. It's just that even in the home services space, it's still a little antiquated.
so what I would probably say is something along the lines of we help you generate leads and close those leads, and we only get paid when you get paid. And now you can make that specific. Like you can say we help, home services companies in the Midwest who are using ServiceNow, and doing under $10 million a year in revenue, and we help them generate more leads and we help them close those leads. We only get paid when you get paid. To me, that sounds very specific.
Yeah. I think what I might do is I might take a step back from all of the AI personalization. Because I know when I get the personalization to me, they're like, wow, congratulations on helping Goodwill Industries of Greater Washington earn an extra $5 million. I'm like, that was 2010,
Yeah,
like
I would like
15 years ago.
I suspect that if you were to use a message like what we just talked about, that like two-line message, I bet you could get conversion from that without even having any personalization in it. It's already personalized based on the fact that you're reaching out to Midwest home services companies using ServiceNow. Like that's all the
Service
personalization.
Titan, make sure ServiceNow, Service Titan are
Service
competitors.
Titan. Okay, I get all these Service Pro. Like there's so many of them out there. Um, to me, that's the
In a
personalization.
moment for a break from
We
our not real
okay.
sponsor,
We
V8
quick word
Energy.
from our sponsor. Um, we've gone back and forth on the personalization thing. Like we were doing that really big in 2021, 22, and I think it helped, but then we did away with it and we were still doing just as well in terms of conversion. And so like and we were doing the same thing. Like congratulations on raising your Series A and I saw it in TechCrunch or congratulations on that press release. I feel like it's too overplayed at this point. Like if people want to figure out in the first 2 to 3 sentences of the email what you can do for them and if it's relevant to them based on again saying like we do this for service home services companies. I think that's all the personalization you need.
No, I agree, and I like that. I tried, and we talked about this too. I tried using it. I'm using Instantly, which I actually do like, especially their support and their analytics. I tried using a tool called Chirpy, which went through one of those programs that sells the done for you setup of all of this that doesn't actually do anything. And the amount of credits that they use to create these personalized videos that aren't personalized. I think I just need to take a step back and actually simplify in order to create greater impact.
So how long are the emails you're sending out? Like are they a paragraph? Are they two
They're like
lines? Are
three
they
sentences, like they're
okay, good,
short, bullet
good.
pointed. Oh, here's another question for you on the marketing side of things. Just so that you know too, Richard, what I do is as these reels then go through repurpose.io, the reels where we talk about marketing, AI automatically adds the hashtag marketing, and then it populates those reels and sends those to different Facebook and Instagram pages that say the finance or personal finance stuff that we talk about. So it's a pretty cool tool. So if I keep saying the word marketing every time I talk about a new topic so that you understand that, so that the AI picks up on it.
Got it.
So
Right.
in your email marketing, right, when you run cold outreach automation and you get an open, do you then let that sequence run, but then run a second sequence on the opens with maybe like news, like you send out a weekly newsletter or a weekly email? I read them. Is there any integration of that into cold?
So if somebody opens an email in a sequence and they don't respond, we don't segment them into any other special sequence. What we do is we take everybody who doesn't respond, and after a couple of months, we put them in a whole new sequence together again and start reaching out to them again. It doesn't make a difference whether they opened the previous sequence or didn't. As long as they didn't reply to the previous sequence, those contacts get recycled into a new sequence like 6 months later, I think, or something like that. Uh, and then the newsletter only goes out to people that have engaged with us. So if you reply to the sequence, or if you're a client or you're a prospect or vendor, whoever it might be, anyone who's had engagement with us, that's who the newsletter goes out to. We're careful not to kind of spread that out too much because it hurts your sender score.
Well, yeah, but for
So
$3.50, you can spin up a new email address and be off and running. I'm
this
just
is true.
wondering how far we push the envelope. Here's a question. When you think about taking, or no, when I think about taking the podcast, right?
Yeah.
Taking the transcript, running it through AI to create a weekly newsletter that's maybe segmented around personal finance and marketing, and then using it in two different verticals, right? The content is already there. A lot of what I've been doing is thinking about how do I take pre existing content and repurpose it in multiple formats. So, for example, the CMS that I built on Base 44, when it creates a new blog post, it automatically creates the LinkedIn post. It automatically creates the
Mm.
reel script. And now I'm thinking about, okay, with Riverside, although the AI automation that I tested did not actually output enough quality enough to continue using it, right? I've got the transcript, write a newsletter creation engine, upload the transcript, and it's like, hey, here's our weekly newsletter, here's the personal finance section, here's the marketing section, here's the AI section, and sending it out through that. I didn't know if that would build stronger relationships or if it would just be more clutter in people's inbox.
I don't know. We get some good feedback on our newsletter. Um, so we continue to do it, but it's also not something that I would say has been like an amazing channel for us. Like more than anything, what we've seen is like sometimes we have a dead lead that like it was a deal that didn't close and it fell through, and like the person's still in our newsletter list, and like 8 months later they'll randomly reply back to a newsletter and be like, well, now we're ready to move forward, we want to do something. So it can help reactivate maybe some dead leads. But other than that, we don't spend a lot of time on the newsletter. But the other thing I would say you should be doing for marketing is LinkedIn. Are you doing a LinkedIn outreach sequence that's separate from your email sequence?
I am. Those same lead, I only put a lead into cold outreach that I have both the email and the LinkedIn profile for. They're
But
not
what I'm saying
connected
though
though.
is run two separate campaigns,
They're
two
two
separate
completely
lists,
separate campaigns. So I've
like
got
different people.
Dripify running,
Okay.
right, doing cold outreach on LinkedIn. And then I've got Instantly running, doing cold outreach via email. I did
Okay.
try using Snowvio, thinking that I would be able to intersect everything, but I just could not get that platform going.
You're probably
Uh,
better off not for LinkedIn.
oh,
Um, but
I am
so,
thinking about shutting Dripify off and using the okay, they opened the email, now go and manually message them on LinkedIn with the connection message.
yeah, you could try. I mean, so everybody who's in our email sequence and they get an email from us, when we send that first email, we do simultaneously connect with them on LinkedIn.
Now, how are
But
you
we
doing it simultaneously? Oh, you did it
we do it
manually with a
manually.
VA?
Yeah, we do it
Okay.
manually. We have a BDR who, she hits send on the email thing and all the emails go out. And then at that same exact time, she goes over to LinkedIn and connects with everybody. But we also have a separate LinkedIn program that we run, that is a completely separate list of contacts that we're sending an outreach sequence to through LinkedIn. And so it's good to compare the two because you're not seeing any response right now on email, but you might see a completely different response rate on LinkedIn.
No,
But
it
it
sucks
can't
there
be,
too.
it's just
So
different people. Like if you get an email from me and you're part of my email sequence, you're not going to get a LinkedIn message from me. You'll get the connection request, but like you're not going to get the LinkedIn. Two separate lists of people. This way we can better measure like the response rate between the two.
now, one thing that is working very well for me, it's become second nature, is I launched a campaign on Facebook, Instagram, running ads, and
Okay.
I'm getting leads right now. I've spent $130, so I'm spending $25 a day. It spends a little over or above. So it's only been running what, 5 days, six into the sixth. I'm getting leads for $8.73.
This is for the marketing offer that we're talking about.
Yeah, the home services offer.
Yep.
And I've got my first call on Thursday with a well qualified lead. So you figure my phone call cost right now at $130 now, and I don't know if I'm going to cultivate other leads. Like I have 3 more leads since lunch that have come through. Well, let me say 2 of them that have responded to qualification questions, and 1 of them that's brand new. Right, that could be a gold mine if I can continue those numbers. Right.
That could be. I mean, that's actually interesting. I feel like you're in a good space where that would work because a lot of times I'm kind of against doing paid like social media ads for service businesses. I just don't feel that like the return is there for the effort and money that gets spent. But because of the space that you're in, um, like kind of your niche, like I've actually seen it work well with home services companies
You know
before.
what's interesting? And I took this from the campaigns that we ran in the influencer marketing space, and I don't think anybody else does this with their Facebook and Instagram ads. Is I don't send them to a website, I don't send them to a form. I have them message me because the response rate is close to 100% on the first couple questions. And then even the ongoing 50, 60, I bet you the response rate is 80% into conversations until we reach some type of disconnect on qualification. That
Mhm.
does not happen in forms. Even if you can get them to fill out the forms, once you get into email, you're now down to like what, 10%? So it is a little bit of extra work, but the return is so much better on it. And I think that's what the game changer has been for me, learning how to do that with ads. Not scalable. Well, I don't know. I used to, in influencer marketing, we run 20 leads a day out of there that I could communicate with on my
Hmm.
own. Here's a disparate data question, though, even for you. If you're doing LinkedIn outreach, if you're doing cold email, you're doing newsletter, right? Are all of those connected into one data set, or are
Yes.
they all, is HubSpot the primary source in the end?
Yeah. So HubSpot is the primary. We also do like a manual thing in a spreadsheet, which is very unwieldy, and I wouldn't recommend doing it, but it just works for us. But everything is centralized into HubSpot. And so whether you're getting an email from us or LinkedIn, our newsletter is also through HubSpot. And
I
so
saw
that
that at the bottom of it, the last one that gets sent out.
yeah. And so like so our main database is HubSpot, and so that helps us
How much do you
store.
spend a month on HubSpot, though? Because that platform gets expensive fast.
I don't know, but I know it's under 1,000 a month.
Okay. Well, I mean, at $800, you have every core bell and whistle that you really need to run a business. And at your scale, it makes sense. It's like when you're getting started with it, it goes from like $200 so you can play around with everything. And then the next stage is $800.
Yep. Yeah, I think that's where we're at. Um, at the same time, like you don't need HubSpot to do that. Like you honestly, if you're using Instantly, like you might even be able to figure out a way to just do it within Instantly.
Well, now
Um,
here's the thing that I want to do, though, right? I've launched Site Chat with an AI bot. And then I've got conversations going on LinkedIn, I'm sorry, well, yeah, on LinkedIn and also on Instagram, Facebook, and WhatsApp from the ads.
okay.
It would be great that every one of those leads central repository that connects them, right? If we've got an email address and you're being contacted through Instantly, that data flows up. If you're going through Dripify or any other type of LinkedIn campaign and we've got your profile linked to your email, that data links up. If you connect with us through Site Chat, where we capture your email, or through any of our lead tools, right? And HubSpot does do all of that. It does integrate socials. It does have web chat. It does connect to LinkedIn. It does connect to Instantly.
Hmm.
Um, it's a like I talked to Pipedrive. I was looking at Go High Level again. I talked to Active Campaign, and like none of them do all of that. So it's becoming harder and harder not to just dive right in.
Yeah, I hear you. Hmm. I don't know any good alternatives.
I don't know that there is right now. I even was on N8N looking at like
Yeah.
workflow automation and things, and starting to look at like, I hate managing sales data through Zapier, Make, or like non-native API integrations that always breaks, and you never know when it broke, and then you think you've got a full data set and then you don't. Maybe that was just a small plug for HubSpot.
Unfortunately.
Yeah. Huh.
So one more thing though I would say though on the topic of lead gen and kind of like outbound marketing, because you're in the home services space, uh each kind of I guess sector you would call it or niche of home services, like you have HVAC for example, and roofing and plumbing and electrical, uh each one of those ecosystems tend to have uh industry associations and trade publications. For example, like if you're an HVAC company, maybe there's like a national HVAC association, right? And that association probably puts out some sort of monthly magazine, like the national, monthly HVAC magazine or something like that. Um, what we've found for clients in those spaces who or at least who want to generate leads from those spaces is that those trade publications tend to be very good for lead gen. And even better than the publications are podcasts. Like for example, we have a client in the financial advisory space. They serve companies in HVAC, and they went on one of the HVAC podcasts recently and generated a ton of leads of owners of HVAC companies who wanted to buy their services by going on that podcast.
Yeah,
And so
that is
I
actually
can,
pretty brilliant.
yeah, like I can share some names with you offline, but there are some podcasts that you might want to look at trying to get on, doing an interview with, if it's roofing, for example, go on a roofing podcast talking about here are 5 things you need to do to close more leads in your roofing business. And you might actually generate quite a few leads from being on that show yourself. So
It's
that,
interesting because I know last call we talked about niching down. And while we have this broad home services sector, right, I would love to focus in on septic, but I've got a non-compete in the space that I think lasts
well, you don't
another
even need
year
to
and a
limit
half.
yourself to one, right? You can be home services broadly, but you could have one page on your site for roofing, one for
But we
HVAC.
do I wanted to tie this together. There is, and I think, well, I know the fund is called Claymore. I think they're a roll-up fund. And there's a guy that posts nonstop on LinkedIn from Claymore, and the dude is brilliant. And they put out a report, Claymore Home Services Economics, and he covered flooring, roofing, HVAC, plumbing, electrical, and landscaping. And he put out a chart. It's claymorepartners.com, talking about the average revenue per project, profit margin, customer frequency, market growth, complexity, market fragmentation. And then it went into some sectors that have nothing to do with marketing, but it was like a playbook for
Oh,
home
these guys are
services.
geniuses. I'm on their site right now.
Oh my goodness, their data. What's the guy? I'm sure if I just open up LinkedIn, he's going to be
Well, I
like,
mean, the reason that this is brilliant is they're playing directly to the trend right now of PE firms rolling up home services companies, which is happening across every sector, like
oh
HVAC,
yeah,
roofing, electrical, plumbing. It's happening across all of them. And so what these guys are trying to do is basically they're a marketing agency, right? But they position themselves as driving value creation for private equity owned portfolio companies. And so instead of trying to market to roofing companies just, you know, kind of across the board, they're going after the private equity firms who already own like 20 roofing companies in a roll up, and they're getting all 20 of those as a client.
he put out an article the other
Very
day
smart.
about the economic model of rolling up one of the most unsophisticated customer service, basically funeral homes. It's
Okay.
one of the last untapped markets for this, and the economics of it, I was like, holy shit, I want to go out and buy a bunch of funeral homes. It was just absolutely brilliant.
Yeah, everything is being rolled up right now. PE's just rolling up everything. Home services in particular are hot, very in demand for a lot of different reasons that we could go into. And
Well, on the septic side and the precast concrete side, they get 3 offers a week.
oh yeah, I mean it's for again for so many different reasons. It's a recession resistant business. There are lots of baby boomer owners who want to exit and they don't have kids that want to take over the businesses. Just 100 reasons why it's a good roll up target. So PE's rolling everything up in these spaces, and if you can get yourself partnered with PE firms who are doing the roll ups, instead of having to go after 100 roofing companies, you just need 3 PE firms that are going to be rolling those 100 companies
You
up.
know what? That's what I did 4 years ago with IVC, not necessarily in the roll up, but working with private equity. And then I went back into market there and realized that they've all built internal, right?
Mm.
You're spot on. The marketing company element is the lead of the PE element of the roll up. So, but I just like, I'm sitting here with this, like, this is like my cheat sheet now when it comes to marketing and targeting, especially my ads. Those are the only things that I'm targeting in my ads because I have the economic models behind.
And when you look at Claymore's website, they actually speak exactly what you were just saying, which is that in their process, once they build out your marketing and like they do all their services for you, they have an in-house team transition where they help you transition what they've built on your marketing apparatus to an in-house team, which is like music to a PE firm's ears because they're all about cost cutting and efficiency. Like they've positioned themselves brilliantly
They
to
have.
go after PE firms in the
I
home
was
service.
trying to find the guy's name to at least give him credit for the brilliance. Oh, Lee McCabe, there he is. He
Okay.
became a board member January 1st, and his posts are just insane. Just pure value. Like I copy and paste them into a data set to be able to run through for AI prompting later to say, hey, give this consideration in your output.
Hmm.
Speaking of which, before we close down, let's do our quick AI update rundown.
Okay.
So, what are some of the biggest updates that have come out of the Base 44 community this week? They launched a SEO integration. Not necessarily an integration, but now you can directly in Base 44 as you're building an app, you can say, hey, please apply the SEO engine that Base 44 provides. And it gives you your XML sitemap. It gives you your robots.txt file. It's supposed to give you an SEO grader, but that is a little lackluster right now. I've actually built my own that's better. But the XML sitemaps have been huge. They have also repaired hallucination infrastructure, which allows you to build more freely without worrying about complete hallucination on design. Although you still have to be aware of core directives and locking pages, functions, and features in the back end in order to not allow the AI to break things. Their support is in shambles, but their Discord is still the best place to go. There was one other big update that they did this week. It was on their integration
What does
side.
this say about the success of the acquisition?
What's that?
What does this say about the success of the acquisition?
For Wix?
Yeah.
Oh, what did they? Oh, they've now started to integrate social media. So like Twitter or X is now integrated. The biggest one is the integration of Zapier and Make. So it now makes it possible for Vibe coders to integrate into thousands of platforms, which is just absolutely huge to pull data in, because data really, like, not necessarily data, but information from other platforms is huge. So their integrations catalog is scaling. Their API engine's getting better. It's pretty interesting to watch. And what's really interesting now is you look at like the integrations and it's like 17 people have installed this, 27 people have installed this, right? I know a year from now it's going to be like 25,000 people have installed this. So getting into vibe coding now and learning how to build basic web applications, websites, mobile apps, it has never been easier. But there was an article on CNBC today, like, what is vibe coding doing to the coding market? People graduating college, right?
Decimating it.
Yeah, it's decimating it. And I don't care if real developers are out there saying that vibe coding is garbage, you've got this, and this problem. They are quickly fixing those problems, right? 6 months from now, what vibe coding can do and what the second layer of infrastructure will be for that, integrations, exports, migrations, code reviews, it's just going to be unbelievable. I told you what is my approach to Base 44? I told you a couple of weeks ago, I'm just building everything, right? If I have an idea, I build it, and I build it till it breaks or it stalls, and then I let it sit there. Because I know somebody out there somewhere is fixing the problems that I'm facing. Just like the SEO one. I tried for an entire weekend to get an XML sitemap to work, not understanding that there was an element of code that was missing from the framework to do it. And then 24 hours later, they're like, hey, we just published the fix because so many people are having this problem. And boom, I started rolling out websites like that. The results.io website, the rogercbryan.com website, the Block Capital website, the Wealth Plans website, they've all got new SEO infrastructure that is just, it's amazing. The last update on AI is...
Market is closed, by the way.
What's that?
Market is closed. We've never been on the air during market close, but...
Well, we did start an hour later, so it's not like we talked into the market close.
No, I'm just saying, we've never... Closing bell. Ding, ding, ding. Market's up 1.1%.
Another
Russell's
1%
up 3%,
day.
which is interesting. And the VIX is down 8%. Okay, continue with the AI.
Totally blew my train of thought. All right. The last thing on AI, and this is still frustrating, and it's not necessarily a hallucination. It's understanding to ask short and pointed questions. Why, right? I've got my sales script here for home services, and I was like, you know what? I'm going to clean it up. I'm going to streamline it. So I ran it through AI, and I'm like, oh, this is brilliant. I printed it out. I threw away my paper copy of my old version. And then I'm like, okay, I start going through it. And I'm like, wait a second. I'm asking them for this, which should have been asked to lead in there, and it's not there. And I'm like, this entire section is wrong. They're asking for, you're trying to requote benefits that you never asked for. And I was like, oh, it just completely destroyed my script. So I'm having
I'd
to
be
manually
curious.
go back through it.
I'd be curious to read the script if you want to share it.
Yeah, you know what? I think it's a little elongated. It's got 46 questions in it.
That's long.
It is long, but it's using the psychology of engagement, probing, solution awareness, criteria, consequence, presentation, commitment. Like there's a whole psychological layer to it, and it flows really nice and quick, except
Okay.
for where AI broke it and it starts asking questions that I should already have the answer to.
Okay.
All right, Richard, any final thoughts? We talked about needing to get this podcast down to 20 minutes, and now we went an hour. So
Yeah.
how did that happen?
Next week will be 2 hours.
Jeez. It does make for good reel content, although I can't get it to give me more than 10 reels.
Riverside?
Yep, it maxes out at like, I think it just automatically defaults to 10 max or something.
Maybe we have to pay them more money.
Nah, that would make sense.
Yeah. Okay. That's it. I've got nothing else.
All right. Neither do I. Everyone have a great day. We'll see you next week where we'll talk about a bunch of random stuff again. Thank you. Bye.